I'm Willie Newman. I'm the founder and CEO of Homepoint. We are a residential mortgage lender and servicer that does business in all 50 states.
Willie, thanks so much for making time join us on the Ivy podcast today on a Monday morning. Excited about this conversation, everything that we had planned out with all of the stuff going on, especially in the housing market. But before we do that, give us a thumbnail version of your career prior to that.
Well, it's been pretty long, John. So I'm going to try to compress it a little bit. But I started in the mortgage business in the late '80s, and I met a gentleman, became my mentor, and he'd seen the confluence of several different trends that pointed towards smaller companies becoming a larger presence in mortgage banking. And so partnered up with him, built a company in a savings and loan, got bought a couple different times, as happens in the financial services sector. And eventually we became a top 5 originator and a top 10 mortgage servicer. The business was sold in '07. So I was fortunate to sit out a good chunk of the financial crisis, but always enjoyed the startup phase of what we had done. So in '09, started up a business for another bank. It was called Taylor Mortgage, and ran that business until 2014. Left there in 14 and decided one more time, the third time's a charm, and started up a business in partnership with Stone Point Capital, private equity fund called Homepoint. And we opened our doors. We acquired a company to enter the business. We opened our doors in April 1st of 2015, and since then been running as fast as we can to build a great mortgage company.
That's super exciting. Very, very diverse career backgrounds, and a lot of the things stand out on the startup space that you've mentioned a few times, getting acquired and building the company from the ground up, which is always very exciting and challenging at the same time. Maybe tell us a little bit more about the value proposition of Homepoint at this stage. How do you guys differentiate yourself from the competition, and what is the kind of that unfair advantage of what you guys are building?
Well, so yeah, we've evolved quite a bit since 2015, and so I'll assume that there's less familiarity with the mortgage business, but there are several different ways in which you can originate a mortgage, and one way is on a direct basis. You can have a call center with agents. You can have advertising. You can have people coming into it. Probably the most common is having retail loan officers on the street, so branches and loan officers that are sourcing loans through referral sources. Another way to do it is through what we call wholesale lending, and that is in partnering with mortgage brokerages. So when we started out Homepoint, my career has really been built, John, on dislocation. So really looking for dislocation. Mortgage is a very cyclical industry, and looking for those dislocations as they occur, and then stepping in to take advantage of those. And previously in my career, wholesale's been the way to do it. Didn't assume that when we started up Homepoint in 2015. It wasn't apparent what channel might end up being the one to be most advantageous, especially as it relates to potential dislocation in the market. But in 2018, we saw, as interest rates rose, that wholesale lending and the broker segment had become much more efficient, at least from our perspective, than other channels of origination. So we stepped into wholesale more heavily in 2018. And since then, have really styled the organization and in essence, retooled the organization so that we would be solely focused on wholesale lending and partnering with mortgage brokerages in order to originate loans.
That's very interesting. And for the common folk out there, when we talk about wholesaling and partnering with mortgage brokers, so if I am in the process of buying a home, and I go to a mortgage broker down the street who works with many different lenders, he or she, they have a relationship with Homepoint for any type of, I guess, special deals or anything that's, I don't know, that they based on that transactional relationship with them, and they're able to get me probably the best deal for my particular situation or the acquisition I'm trying to get by having that relationship with Homepoint. Is that more or less accurate description?
Yeah, it is. So here's how I like it, because I think there is, it's a little bit opaque as to how things work in the mortgage business. So, as a consumer, it typically is an infrequent transaction. There are times where it's more frequent because rates go down, people refinance, but quite often it may be something that a consumer only does once every several years. And so the way I would characterize it, John, is that the superpower of a mortgage broker is choice. And the choice that they have is to partner with us or other wholesale lenders and work with the consumer to understand their situation, and then pair that situation up with the wholesale lender that's going to provide the best solution for the unique set of circumstances that consumer presents. So if you look at, again, if you kind of compare it to retail lending, a retail loan officer will only have one choice. They'll have the choice of the company that they work for. Mortgage brokers, on the other hand, have several different, I call it suppliers or choices that they can present to a consumer in a way that optimizes. It both aligns them with the consumer, and it forces us as a wholesale lender to focus entirely on the kind of price, product, service, but in specifically the experience that both the broker has in working with us, as well as the consumer that at the end of the day gets the mortgage loan.
Makes perfect sense. So thanks for that. For selfish reasons, I was very excited about this conversation because just like a lot of people around me, we invest heavily on the personal portfolio side into real estate.
Right.
Whether that's commercial, multifamily, residential, and so forth, some flips, some short-term rentals, and all of that great stuff. I have a lot of fun there. But at the same time, I spend a lot of time researching the market and trying to understand what's going on and just, not necessarily predict for what's coming, but look at certain indicators that would drive my investment thesis, so to say. By looking into Willie Newman's crystal ball and you being the professional in that space, I would love to get your perspectives on not necessarily from predicting the market where that's going, but where do you think the current market basically stands? Are you surprised, or are you at the end of the day adjusting some of the strategies within the organization? Just tell us maybe a little bit more through that current thought process as you're going through with everything that goes on in the industry.
Sure. So, I mean, it's no secret that things have changed very significantly in the last 6 months, and whether it's residential real estate and then mortgage, which obviously are very much interrelated. Rates have gone up faster than any cycle really since the 70s. And while there was very significant demand, demand for a home was definitely outpacing supply. And I think what you're seeing now is that it's becoming closer to, I'll say, equilibrium. There's a certain element, I think demand, kind of like emotional demand is still higher maybe, but ability to actually acquire a home has become, more challenged by how interest rates have gone up. So I think what you're seeing is a little bit more of a kind of equilibrium. I think for us, one of the things that has been different is that we grew very rapidly during the 2020, 2021 cycle. Because we were a new company, John, it really was our opportunity to build, fairly significant scale as an organization. And historically for me, scale's always been an important part of the strategies that I deploy. Coming into 22, it did look like it was going to be a different market, and it's become a materially different market. And so we really, we've actually downsized the organization, and we're taking this opportunity to reset the organization in a way that will allow us, again, because there's a dislocation taking place in the mortgage market. There's, too much supply, not enough demand. Supply was built up to meet the 2020, 2021 market. Now it has to, kind of correct into it. So for us, we've tried to get ahead of that some, and we're really resetting the organization in a way that is really looking forward at, okay, we did this in 2020 and 2021. We were successful doing it, but we're not going to assume that that's what's going to be successful in the next cycle. So let's retool the organization in a way that is forward-looking and says, okay, it's going to be different. It's going to be more competitive. And we do believe the broker segment in particular will grow because of the inherent advantages that it presents to consumers. And so let's position the organization to be there. So that's resulted in us downsizing, but also really kind of crystallizing our focus on specifically on the broker experience and by extension, the consumer experience.
Makes perfect sense. And thanks for sharing that, which leads me further to the point of innovation, because in mortgage lending, it's, at least from my lens, from the field that I operate, I haven't been seeing a lot of disruption, a lot of innovation in that industry in general. Yes, there's certain products that come on the market. There's probably different lending solutions, different products when it comes to, specific loans, so different programs. But outside of that, at least I haven't been seeing a lot of the transformation in the industry or the market in general. Maybe talk to us a little bit further about how do you build that culture of innovation at your organization, especially going through the different cycles. It's a very cyclical industry, very cyclical market. What are some of the strategies that really help you stay innovative, and maybe certain practical insights into what really helps?
Right. So, well, I think you identified it. I think for us, I'll probably, this will be like in the category of a confession, but for us, because it is so cyclical, there are certain points in time where innovation, frankly, takes a back seat to just capacity and throughput. And then there are other points in time where innovation becomes more critical. And so for us, there's a couple things that we've done. So I'd say we're at the point now where innovation becomes more critical because you have to be able to differentiate yourself. There's not, if supply demand is out of imbalance, it's time to differentiate yourself. And so, a couple of things that we're doing. One is because of the time we came into the market, John, it was going to be difficult for us to compete with some of the larger lenders who have huge technology groups and do a lot of proprietary work on technology. So we took a different path. We really embraced low-code technology very early on in its evolution. And so for the last several years, we've been working in low-code and increasingly moving especially our associates into the low-code environment. Eventually, we'll move more of our partners into the low-code environment. Sorry. So that, we feel like we've been ahead of the curve in doing that. And we believe in an environment like this where not only is innovation important, but the cost of innovation becomes extremely important. We think we can continue to evolve our technology quickly using third-party low-code tools as opposed to large-scale internal development. So I'd say that. The second thing we've done is that, like I said, it's like we had our associates for a long time, just like making the donuts and probably not spending a lot of time saying, okay, how can we make this better? And so we've very recently instituted something we're calling KISS, and it has two meanings. One, and this was me. My executive team wasn't real excited about this one, but I said, KISS to me means there's two meanings to it. One is kill stupid stuff. So I don't know if that falls in the category of innovation, but I think when you grow very rapidly, there's a lot of, and we also have divested of some of our business units. So there's lots of things that you kind of accumulate, whether it's infrastructure, whether it's process, that starts to not as much apply, as you reset the organization, as you become more focused on one channel of business. And so, I've said, let's use the whole organization. Let's engage the whole organization, all 1,000 associates in trying to identify if there are things that we're doing out there that we shouldn't be doing or should be doing them differently. Let's figure that out. The flip side of that is and I'm using a little artistic license, but we're calling it create smart stuff. And so we're going to kill stupid stuff and we're going to create smart stuff. So that's obviously a little more exciting. But to me, it's like you almost have to it's like if their analogy is you kind of have those brush fires, you have the forest and then you have the brush that accumulates and you got to burn that out without burning down the whole forest. It's like, we got to get the brush out of there and then we can let the trees grow again. So that's one of the ways in which we're engaging our associates in a different sense than we were previously, because again, we had them very focused on, simply the throughput and the velocity of the business.
That's super exciting. And I want to double click on something that you've mentioned when it comes to technology and innovation. Me coming from a highly technical background at organizations of various size, I'm always curious about the role of technology, especially in operations like yours, because I would imagine technology plays a critical role, especially when it comes to making your mortgage brokers or your partners, so to say, successful when it comes to being more efficient or more, just at the end of the day, be able to help their clients in a much more efficient manner. Tell us a little bit more about that role of technology. How do you guys leverage that? I know you mentioned you guys are trying to be very lean, low code, no code, which is super exciting, very new trends in that space. Tell us maybe some further use cases as far as how does that help your organization and some of your partners?
Yeah, again, I think moving our associates and eventually our partners into that environment, it really it helps us detach from the I'll say traditional industry technology. So again, we are very low from a proprietary development standpoint. So our infrastructure really is third-party kind of industry standard type of technology. And so separating, to me, while those technologies are good and obviously they've been long lasting in the industry, sometimes they force you down to the lowest common denominator from a process standpoint. So in lifting up into the low code environment, our intention is to really be able to design our process around how we want to do business and also how we want to present ourselves to our partners and eventually consumers. So I think that's probably a good, kind of higher level example. So, specific use cases are in our underwriting section, for example, we've kind of taken our underwriters entirely out of the origination system environment. They're working entirely in the low code environment. And it really allows us to specifically tailor their process around how we want them to work, as opposed to, it being dictated by some third party.
That makes perfect sense. From a standpoint of building the team around you, you've been an executive at organizations of different size. ABN AMRO is an example where we've had mutual friends and we both got a chance to work there. And now building your own company, so to say, moving in the startup environment. Tell us a lot, as an executive, surrounding yourself with the top performers, the best candidates out there is probably at top of your mind 24/7, whether you're actively recruiting or not. Tell us a little bit more about some of the hiring strategies that you have, implemented in the past that maybe continuously help you within your current role, and maybe talk a little bit further as far as retaining that top talent, because one strategy is to attract them, but how do you retain that?
Right. So, well, again, I'll do another confession. Maybe this is my confession day. I don't know, but it's funny because I'm sure you've experienced this, but when you say the word startup, there's certain connotations associated with it for everybody. And, people get very excited about a startup and they're like, well, who wouldn't want to work for a startup? And then you realize, or people realize, that when you're at a startup, it's like, no one's changing the toner on the printer. No one's taking the garbage out. It's like no one's doing anything. You're doing everything. And so I think initially there was some, kind of almost like a euphoric type of reaction. Some of the people that were attracted to the organization, once they kind of figured out, oh, this is real work. We had to cycle through that a little bit. So I think that maybe I'd forgotten about that, or maybe I had a really high hit rate in my prior iterations, but it's like, a startup is not for everybody, and kind of the sexiness of a startup is very much kind of, kind of overrated. So I think at certain points in our cycle as an organization, there's been different types of skill sets that have been kind of more beneficial. But I'd say where we're at today, probably the most important thing this will sound maybe a little strange, but most important thing from a leadership standpoint is to actually be an operator. So, when you're a larger organization, so ABN AMRO is a really good example. There's a lot of people who are kind of hovering over the business and thinking about strategy and thinking about long-term vision and, maybe advising you on some things. And I think, what we've tried to do is a little bit kind of like, let's make our focus one thing, and let's make sure that everybody is going in the same direction. And in order to do that, it's like you really can't be detached from the business. You have to be there. Now, obviously, our general counsel is not, going and making, underwriting mortgage loans every day, but allowing them to have an understanding of how it works and how their staff plugs into that process and supports it is much more important now than you don't need that as much when you're much bigger and you have more of an infrastructure in place. So I'd say now, we really got our folks focused, and I'm really proud of how the team has kind of transitioned that their focus from a leadership standpoint. And it's like, you need to be an operator. Now, that doesn't mean you're an operator 24/7, but you need to be an operator in this environment.
So when it comes to selecting your partners, your teammates, your direct reports, and so forth, you've had your share of great experience interviewing at different levels of the organization. And interviewing is such a complex space that, I've been on the different sides of the equation and I'm sure yourself as well. How do you structure your interviews, and what are the different questions that you like to ask? And more importantly, what do you look for in the responses when you talk to potential candidates who are looking to join your teams?
Yeah. So I don't know if I'm like, I don't know if I'm a hard interviewer or an easy interviewer, but my favorite question is, tell me about yourself. Mm-hmm. That's the first question I ask. And it's probably the only scripted question that I have. Obviously, depending on the role, there may be more specifics, but I really want to understand what makes that person tick. And what I'm really looking for, John, is like, I figure if they've gotten to me, they're probably proficient. So I don't need to check for proficiency. I may have, like, doing a role again, I may have more specific questions about level of proficiency, but I don't need to check for that. What I need to check for is what makes them tick, and will that integrate into our culture? And so, my questioning is, like I said, it's very open-ended because I want to hear them talk about themselves. I want to understand in what sequence they do that. And from there, we usually have a broader dialogue about what makes them tick, and why they might be interested in working with Homepoint. And I kind of learned that a little bit, like I said, from previously, where I made an assumption about startups. Like when someone says, I want to be at a startup, I was like, well, of course you do. It's great. And what I learned is that they wanted to be in, like, some idealistic version of a startup, and not the actual kind of grind that goes along with being in risk that goes along with being in a startup. So, yeah, like I said, I'm very open-ended. I start very high level, and then based on where the dialogue goes, I start to drill down.
So that makes perfect sense. And it seems like you structured those interviews, not necessarily an interview per se, but more of a dialogue, like you said,
Yeah.
and a two-way street where you have the conversation and you also give the candidate an opportunity to make their own assessment. So that makes perfect sense. So thank you for sharing that. We've seen in the news and in the industry, in the current market, that there's a lot of companies going through restructuring, as they call the right sizing. At the end of the day, it's nothing exciting, where a lot of people lose jobs because of what's going on in the industry. I would imagine you have to deal with some of that as well. How do you keep the employee morale, high at the end of the day? What are some of the strategies that really help you stay engaged with the workforce, at the same time not get distracted with everything that goes on outside of your organization? Maybe just talk a little bit further about some of those things that help you communicate that vision much, in a clear fashion.
Sure. So we have. So as I mentioned, we've reset the organization. We are smaller than we were before. And, one of the reasons that we did that was that I felt like that I always feel like the CEO is in charge of culture. And so when you're a larger organization, you're less connected to the culture directly. And to me, part of the reset is an opportunity for me to get more, I'll say, immersed back in the culture. And so we have principles and stakes. It's kind of what we anchor the organization on. And the principles are really my principles translated into, I'll say, more business terms. And then the stakes are really how you operationalize those principles. And so, again, when you get busy and you get bigger as an organization, I think a lot of times that can get diluted. And so what we're really doing is re-engaging with our associates, or I am more specifically re-engaging with our associates in a way that is much more kind of hands-on and involved than I was when we were a larger organization. The second thing we've done is we have had, a return to office has been a big challenge for us. We've kind of stopped and started. And we have a pretty significant percentage of remote associates that are always going to be remote because they're not coincident to one of our sites. But literally this week, we've said we have a return to office strategy. There's no going back. So, and it's very light from an attendance standpoint. It's not a forced march 5 days a week, like I guess the bad old days. But we're not going back. And one of the reasons we're doing it, and we're making it very kind of rounded in its orientation, in that it's just not just about coming back to work. It's about activities while you're at work. It's about interacting while you're at work, and not in a transactional sense, but more in a relationship sense. And so I think that, to me, somewhere along the way in this 2+ year odyssey that's been fully remote, there's a little bit of a connection that needs to be reattached and reinforced. And so I think that's a really important part of what we're doing, to make sure that it's understood. It's like we had to reset as an organization, but it's like those of us that are here, we're all going to be going in the same direction. We're all going to be aligned behind the vision and mission for Homepoint.
Makes perfect sense. And now, just shifting the focus more on you as an individual, as a professional, as far as your content diet, what do you consume on a daily basis to keep yourself informed, keep yourself educated on all the things that are going on, not only in the industry, but also some of the things that personally interest you? Share some of those resources with us.
Sure. Yeah. So I'm a big, I guess, is surfer kind of a legacy term? I don't know, but I do a lot. I mean, there's a lot of go-to sites, like Bloomberg as an example is very much a go-to site for me. the industry publications, National Mortgage News, Housing Wire, et cetera. So I try to keep in tune with it every day. I try to keep connected with a number of my CEO peers in the industry. I feel like I have good relationships with them. And so, I think that's a good way to understand, kind of some of the nuances of what's going on. I'm a big reader of the New York Times and Economist magazine. And I think those two publications educate me as to what's going on in the world on a very efficient basis. And, frankly, sometimes when I read them, I don't know if I want to know all this, but I think, again, I really feel like it's interesting for me personally, but also it's almost like philosophically, I want to be kind of well-rounded enough about what's going on, because there may be an element of it that applies to the Homepoint business, but also it just kind of keeps me learning every day. So one of my personal principles is get a little bit better every day. And I don't know how you do that unless you're constantly kind of out there reading sources, or obtaining sources of information that can inform you of things that maybe you don't want to know about, but at least you do understand what's going on.
Yeah, that makes perfect sense. And it's funny because I operate in a very similar fashion, but I'm using podcasting conversation just like
Right.
this as an
I do a lot more podcast listening than I used to as well. And I've kind of broadened that as well. So thank you for reminding me of that. It would have been bad if I didn't say that, actually. So good.
Yeah, no, but it's a great avenue for me to learn. It's a great avenue. It's a channel for me to connect with folks that are a lot more successful, a lot more knowledgeable about certain areas. And in the exactly conversation like this, I'm able to extract a lot more value versus just maybe consuming some of the resources that we do on a daily basis. So there's just a little plug for what works for me. And I have one of the final questions for you, which is pretty loaded in the sense that the advice, or maybe a series of advice that you had received early in your career that continuously, you come back to that even to this day. Maybe talk a little bit more about this. What not maybe specific certain like words of wisdom, so to say, but more of a strategy, more of a theory, in the sense that, look, it helped me in the past. The reason I asked that is because a good portion of our listeners are early stage career professionals who are looking to get into the industry, but also executives like yourself. And the reason they subscribe is because they want to learn from their peers in the industry.
Sure.
So maybe just share some of your frame of thoughts from that standpoint.
Like I said before, but I think probably there's two things that I learned from my mentor. I'd say lots of other things, but two primary things. One is dislocation creates opportunity. So, when I stepped into the mortgage business, I had no idea how cyclical it was. I had no idea what dislocation meant, but I learned, when we formed the business that he had a vision for, that I soon learned that was based on a dislocation. At the time, this is 80s, so savings and loan crisis created this huge dislocation in the mortgage business, because both the primary source of funds for mortgage and where most of the loan officers work both started to fragment away. So that's probably the biggest strategic lesson I learned, John. The second is the importance of culture. And again, when I was hired by my mentor, I was 24 years old. I thought I knew a lot more than I did. And I didn't really kind of even know what culture was per se, but we developed a culture. I figured out that's what we did. And then I've kind of, both evolved in how I'll say the deliberate nature in building it, but also, kind of how it's matured over time. Because as you might imagine, a culture that you build in your 20s is going to look a bit different than a culture that you build in your 50s. So those are probably the two biggest lessons that I learned from my mentor that have really carried me throughout my whole career.
Super exciting. Last but not least, what is one book that maybe you're currently reading, or if that's different, what is one book that you always recommend to others, and why is that?
Okay, this is gonna sound a little weird. I actually have five.
Do it.
One is the four. So, because I've gotten asked this before, and I don't know if I've given very good answers, but I've thought about it more. So, Robert Caro wrote a 4-volume biography of Lyndon Johnson, and I read all 4 volumes, and each volume is like 1,000 pages. So, that I know that probably has nothing to do with business or anything like that, but it really impacted me both in learning more about LBJ, but also the amount of time that Robert Caro took in writing those books, and the amount of detail and the meticulousness with which he wrote those biographies, those volumes rather. I mean, it's always kind of stuck with me. And like I said, it's like, I don't feel like I've answered those questions very well. I'm always trying to think like, what do people want to hear as opposed to what's truly impacted me? The second one is the David Foster Wallace about graduation speech, which has been made into a tiny book, which is called This Is Water. I recommend that for any young person who's coming out of school or, kind of going into their career. It's a wonderful speech. And, he was obviously a troubled man, but, there's a lot of his books are pretty interesting too. So those I cheated a little bit. Those are the 5 books that I recommend.
Oh, that's super cool. And we'll make those titles available in the show notes. Willie, I can't thank you enough for your time today. Very short and insightful conversation. I personally learned quite a bit. And just like with every guest on the show, what I love doing is a follow-up conversation recording in about a year, where we revisit the conversation from a year ago and see if everything we've discussed still makes sense, still applies. So I'm definitely looking forward to doing that with you as well.
Sounds like a plan. All right, John, thank you very much for having me.